Hello everyone, and welcome to the next Bright Talk webinar, where today we're talking about the second Payment Service Directive, which is meant to neutralize and make everything equal across the EU banks and to just make it clear, more banking transparent system that will, I think, definitely benefit the consumers. I'm Jennifer Riggins. I call myself a tech translator because I spend a lot of time speaking to, writing about, and then translating the tech industry and its benefits to the lay people like myself. And I'm really excited to be here today. Please remember you can ask any questions you would like, as well as in the attachments and links tab, you're going to find a bunch of downloads. And of course, you can always continue the conversation, especially this will be streamed and the majority of the people will watch it later as well, on @BrightTalk on Twitter. So thank you so much. And now, can you guys please introduce yourselves, Dan?
Certainly. I'm Dan Jones. I'm a financial services regulatory lawyer with EY and have spent a lot of time recently talking with fintechs and traditional incumbent banks about how they're approaching PSD2.
Hi, I'm Becky Clements. I'm Head of Industry Engagement and Payment Change, which PSD2 of course falls under. We've started our programme, we're looking at APIs. It is very exciting, but we have to keep saying there's lots of sexy stuff, but actually there's lots of mandatory stuff as well. So it's busy.
And it's not fully 100% clear yet what will be in it.
No. So
and we're about a year out now from it.
Yeah. You
Yeah,
can't
of
wait.
course, absolutely.
I'm Hamish Thomas. I'm a partner with EY here in London, and I lead our payments business across EMEA. So not surprisingly, I spend a lot of time talking with banks across Europe and here in the UK about PSD2, more broadly open banking, both the challenger banks, the larger banks, and also fintechs, really all participants who have a stake in this, which is really everybody.
Yes, because as I mentioned, it was EU. It's really anybody that wants to connect to an EU bank will have to qualify for this, right?
Yeah, absolutely.
And what do you tell these banks if they say, well, I'm not part of the European Union, I don't need to be involved in this?
Well, I think really it's less about being necessarily part of Europe or not. It's more about the intent of PSD2, and then here in the UK, open banking more broadly, which is really about opening up the banking system to greater competition, fueling innovation, and recognising that the data that banks hold about for their customers is something that, by providing access with the permission of their customers, and there's a whole innovative agenda that has potential. And when phrased like that, it's less about one must. I think it's more about the potential. But I think perhaps to pick up on something Becky said, I think it's really important to recognise there's a compliance dimension to this, and there's sort of a strategic decision-making dimension to this. And often we talk about APIs and API economy, and I'm sure we will today, which is very exciting. But there are also some fundamentals which are about creating transparency, reporting, looking after customers with more of a slightly compliance edge to it. And I think it's important that when people look at this as a regulation, they recognise both sides of this and perhaps don't get overly blinded by the bright light of the API stuff.
And so as you guys spoke, it's definitely part of the Open Banking Initiative is to level the playing field in financial services a bit, to let a lot of fintech startups involved. But as working for older financial institutions and giants, as it were, what is the benefit for them to get behind PSD2 beyond that they have to in some ways?
Well, I think just adding to what you mentioned there, I mean, PSD2 is not only about harmonisation. It was part of a context of regulation, which was, SEPA, the multi-interlateral fees regulation, and this body of regulation that wanted to put that level playing field, but that's now extended in PSD2, I think, to competition. And what they're wanting to do is open up that playing field to lots of smaller providers, lots of people that are going to revolutionise what's happening. And there's this concept of proprietary information and people having ownership of the information that they've generated, their transactions. So banks can either allow that information to be shared with other people who see this as an opportunity and just be compliant. And certainly a lot of people that I've spoken to think, well, we're a trusted brand. So we're not going to lose this market share because people will always want to come to us. And I don't think they're recognising that people will start to nibble away at their payments and the opportunities, and that I think just holding a bank account for somebody doesn't make money these days. It's generally accepted, I think, in the UK that if you have a bank account, you get it for free. So actually, where do the incumbent banks make their money? It's in payments. It's in the fees that they can charge on credit cards or commissions that they can take in the other services. And so unless they accept that there's going to be this unbundling of the different services being provided, it's, they will certainly miss an opportunity because other people will take it.
But then if I believe the statistic for the UK is 94% of people won't change banks every year. So is there that much of a risk of these little guys coming up, or will that disrupt and make the customer service better at these giants?
Well, they don't have to change banks because they can keep their bank account with the same bank. It's just how are they making their payments? How are they purchasing things online, which is where the banks were making a lot of money, generating a lot of their business. They can stay exactly with the same bank provider. It's just actually all the additional bits. You can get an overdraft, I think, facility without using this, still using the same bank, but somebody else can provide the overdraft.
I think as a challenger bank, there have been the incumbent banks. It does help opening up everything. And, you talk about a revolution. We were the first new bank in the UK. So we were leading that revolution against the incumbent and the big guys. So, this sort of opportunity, is great, the way, the economy is opening up.
Mm-hmm. I think to the point about switching bank accounts as well, so I think just to pick up on the point about both points really, this is about sort of access to a wider range of services from a wider range of providers. They don't necessarily need to be a bank, although I think from recent conversations I've had, a lot of the larger institutions as well as the smaller ones are looking at where the opportunity lies, both in using their own data, but also potential access to the other data held on their multi-banked customers. So I think it's not so much about the switching of a bank account, it's more what is that new generation of products and services that could be provided not only by the banks but by other players, and also how might they provide those together. So I think it's not just about necessarily where one's bank account exists, but how is one going to consume financial services in the coming years when it is more open, and frankly some of the innovations that will result perhaps we don't even know yet.
A bit like Uber.
Yeah.
But sorry.
No one would have thought about Uber before.
Which just makes sense if you think about it now. Like, oh yeah, that makes sense.
Yes, and it makes life easier. So I think there's going to be some opportunities there to make customers' lives better, to make it better for the end user.
But I think it's a very good point about it's not even just about changing what's currently there, it's adding to it. And so, I think there are opportunities where the banks historically have maintained trust because they haven't abused big data. They've held on to it, but they haven't used it. They haven't done targeted sales because I think that trust would break down. Now we're seeing greater acceptance of people being able to use that data. People want useful things sold to them. And actually the new providers are gaining this trust in being able to have that targeted use of big data. And so the banks have either got to adapt and find new ways of being able to incorporate into, for example, terms and conditions, the consent to be able to say, we now want to start using your information where we've never done it before.
But who actually reads the terms and conditions?
That's a big concern.
That's
yes. Someone, I don't know, like my mother, who, she probably never reads it. She probably just ticks the box.
Do you read it though? Like on your apps and things? To be honest, we're in technical or financially aware sectors, and they need to make them easier to read as well if they're going to exist.
Well, there's another. Sorry, go ahead, Hamish. I was going to say there's another interesting context to all of the regulation around this, in that we've got the general data protection regulations coming out, which will require explicit consent to be able to use people's personal data. And so that comes into force in May 2018, which means that these banks have also got to now frame their client agreements in a way that allows them and gets this express consent to be able to use this information. And so it's not just PSD2 that's going to have this impact, it's what's opening up the market, but it's GDPR that's also going to control the way that banks can use the information.
I think perhaps thinking through, so there's obviously the opportunity piece, which I think everyone loves talking about. In terms of the challenge element, there are some questions that are outstanding that the industry does need to get to grips with over the coming year. And this notion of liability is one of them. And I think if we think in the context of PSD2, there's the bank that holds the data, there's the customer whose data it is and arguably has control over it. And then there's the third-party provider. And the relationship between bank and third-party provider in that context is still somewhat unclear around liability, around security provision, and these sorts of things. So I think there's a sort of a balanced discussion ongoing and needed that says if these are the opportunities, what will be the role of the incumbents, both established and new? What will be the governance and the liability model that allows for the introduction of these third parties in a way that is suitably responsible? Because ultimately at the heart of payment systems is stability and resilience and security and trust. And I think the industry needs to come together to understand, as this end-to-end chain of participants changes and becomes more complex, how collectively that trust, stability, security is retained. Because if that breaks and the trust begins to break down, then that, I think, is a threat to the success of the competitive, innovative agenda that this is trying to push.
And it doesn't matter which bank it is, it will bring down the trust of the entire industry.
Yeah.
I just want to take a moment and remind you to not let it be easy for our panelists. Please do ask questions if you're on the live feed of it, and we definitely want to ask them your burning questions, so please don't forget to ask questions. Thank you.
I was just going to add to what Hamish was saying, and that of course another element to that is that PSD2 says you can't force there to be contracts between your incumbents and your third-party providers. And so how do you frame that relationship? How do you ensure that where there's also a requirement that liability falls with whichever party perhaps caused a fraudulent payment or a late payment, a mispayment or whatever, how do you define where that sits? Your incumbent banks will probably take the hit initially, but will then have to go out to the third-party provider to say, well, look, how do we divvy this up amongst ourselves? And where you're not in a situation where you can force there to be contracts with your third-party providers, how do you ascribe liability? And I think between
Huge
both...
question.
Yeah,
and it's not clarified in what we know so far at PSD2.
exactly.
Is who are liabilities. So what should banks be doing to prepare for themselves for this? Because obviously they want to leverage the benefits of the application programming interface, and they want to access all of this open banking initiative and all this exciting new things, but they are at a greater risk, the older financial institutions, you're saying then? Or because it from everything I've read, is completely unclear of who will be to blame if there's a fraudulent act, right?
So I think it's probably it's not necessarily about which party may or may not be the most at risk. I think in any given situation there's probably sort of a distribution depending on who is playing what role. But I think to your point about what should be happening, obviously there is an industry debate going on, to which all financial institutions, large and small, fintechs, regulators, trade bodies are participating. I think the important thing is to sort of accelerate the progression to a consensus to how it should work, because without the necessary comfort of the relative parties, then uptake in terms of creation of these relationships and what will be delivered may be threatened. And I think there's a premise behind all of this that there will be user adoption, that the products and services will come and the users will adopt those, and that is a question mark. One part about what are those products and services that will get that critical mass and that will be very exciting. But the flip side of that is how do we, as an industry, bring together that trusted security, the understanding of who plays what role in the associated liability that allows for the industry as a whole to promote that opening up. So I think it's not necessarily incumbent on any given institution to necessarily drive that, but with the regulators, both in Europe and here in the UK, to work together to get an answer to that question relatively quickly. Because when thinking about the questions that I or we often get asked, the liability model, security, some of those challenges that are yet to have clarity in terms of the regulation or the associated specifications tend to be those ones that are beginning to burn quite hot in people's minds as hurdles to be cleared to realise the potential of something like open banking.
I think the security one is a very good question. Like contactless and chip and pin, it took a long while. There were slow burns, and I think the API and open banking will be a slow burn for the consumer and the customers to feel comfortable using it and feel that it is safe and secure and they're not going to lose all their money.
But in a different way is contactless, and which still in my country, the US, isn't very widespread. They finally got the chip, but you still need to sign for it. It's not related to PIN, which was just crazy ridiculous. But that's what they decided in Congress and all. In here, it's basically going to be mandatory in another year and a month or so, or a year and a month and a half. So can we have that slow burn? Or is this something even that the average consumer has even heard of PSD2? And is this actually the fault of the banking industry for not getting it out there more?
I think it'll be customer choice. Do I want to pay that way, or do I want to pay this way? Do I want to look for a current account this way, or do I actually want to go to down the high street and go into the different organisations that are there?
I mean, I think it's an excellent question about what's the driver of this. Is it a driver of regulation pushing forward the technology, or is it the other way around? And I think there are probably strong arguments to say it's the latter. A lot of the things so payment initiation services as per PSD2, there are already technology providers that can do something similar by screen scraping. So there are already people that are buying into these products, and it's in fact the fact that technology is changing so rapidly, and in fact regulation is trying to keep up. I think by the time PSD1 had sort of been implemented, technology had already pushed forward, and so we're seeing a need for PSD2 just to try and keep up with what the providers can already do.
Oh, I think so, absolutely. I think PSD, the original, definitely was based more on regulations, but at that point it takes so long because regulatories, and that's already the risk with PSD2, that by the time it comes out, maybe the API won't be the driving factor behind it all. We're not even sure. We have our first question from the audience, which is, do you see a conflict in some of the developments on the regulatory horizon? For example, the creative benefits that could be unlocked by the open exchange of data versus emerging data protection legislation, and how do we influence the right outcomes?
So I think conflict is quite a strong word. I think clearly there's tension. So on the one hand, we have an agenda that's driving openness, sharing of data. Importantly, it must be with customer consent. So it's not a case of the door opens and it becomes a free-for-all. And then there is a need to protect that data and the responsibility of various parties involved to play a role in that. So I think attention, yes, probably a healthy one. And there is clearly a balance to be struck, and we heard about GDPR earlier on. I think I would say no to conflict, because I think it would be a conflict if the outcome had to be either or. And I don't think it's an either or. I think there is a way forward that allows for the necessary level of sharing and openness to support the innovation, to provide higher levels of competition whilst protecting customer data, which is not to say it's easy, but I'd probably characterise as a tension rather than a conflict that would suggest one or other has to be prime, which actually it's a balance that we need to strike.
I agree. I think when we're talking with financial services firms, there's a missed trick if they're not seeing both regulations coming up at the same time and dealing with them at the same time. I think Hamish is entirely right. GDPR frames how PSD2 should be set out, and there is this opportunity to have more open, accessible data, but that should be done in a secure way. And so by factoring in both, and it will be more difficult, I think, for the financial services providers. It will probably cost more to comply with both and take more time. But they are complementary in actually trying to achieve what it is, which is open data, which is secure and accessible.
Well, since we're just shy of a year, or a little more than a year out from it, which yes, is
Scary.
Yeah, it is really coming soon. How ready do you think banks are?
Well, so one of my clients said it's not just a year, it's the fact that there are 2 Christmases and summer holidays in between, so it's a lot less time than that.
So about 8 months per se.
Yeah. And then, I think how ready are banks in the UK? I think a lot more ready than they are outside the UK in many respects. That's partly driven by the Open Banking Working Group. So, there's a collective, we're being forced in the UK by March 2017 to have certain reference data made available and certain comparators. So that's pushing things along. But I think banks are still fighting with this question of, do we just comply or do we see this as a strategic option?
And actually, what do we comply with? Because some of it's still not clear.
Clear at all. It's insane, especially because, let's be serious, while the tech market is very innovative and rapid moving, financial services market doesn't have the same
beat, right?
Stereotype of being very pivoting and moving fast. So
I think there's an element here as well. So the PSD Payment Services Directive, and perhaps early on there was a bit of a struggle with the recognition that it's not just about payments. So when you look at the parts of the bank which it touches, I think many institutions perhaps looked at the Payment Services Directive, or the new, and gave it to the payments team who run payments change. And over time have come to realise it's about so much more than that in terms of current accounts, a whole raft of products and services, access, bundling of products, creating an ecosystem, an experience, and all those sorts of things. And that's a much more challenging topic because some of it's quite nebulous. Then in amongst all that, there's a clear stream of the need to be compliant. So I think when we look at the way many institutions are approaching this, there's an element of we understand how to get compliant. It's something that financial institutions have been doing for a long period of time. It's causing a little bit of head scratching around how do we do that whilst making some strategic decisions. And I think some of the programs are now being set up to answer question one, and if like accelerate that, whilst making provision for perhaps an extra time and laying the right foundation in the early days to be compliant, but not close any doors on oneself in terms of how does it when it comes to the architectural approach to APIs, for example. There's a way one could do that to focus wholly on compliance and perhaps end up with a less flexible and agile architecture coming down the line. Or one could become compliant in a way that leaves the door open. So I think, from that perspective, levels of readiness, I think, probably more advanced in terms of becoming compliant. I think there's probably quite a broad spectrum across institutions of having worked out what role any given institution wants to play in sort of the PSD2 or open banking world, and what might that look like in terms of who they might work with. So the big question about how does one collaborate to compete is a question that people throw out there quite a lot. And I think the nature of the conversation over the last 18 months has changed to a degree, where previously there was a lot about disruption, disintermediation, and quite sort of almost pugnacious type language. And there's still elements of that in terms of threat and opportunity, but also a much more collaborative tone to many conversations one hears at various conferences about how does one collaborate for the better of, I guess, a competitive positioning of a number of parties as opposed to one in particular. I think we'll see some more of that because it allows people to draw on the best. So the innovation of a fintech versus a trusted brand and stability of a challenger or an established institution.
This is
and that I
lead
think
to
will
more
be
partnerships then.
I think so. Yes.
And I think because we don't really know what ready looks like on that more strategic option, we're seeing lots of different banks taking very different approaches. There are a number that are investing in venture capital to support fintechs, a number that have got accelerator platforms where they are inviting in many different fintechs and giving them an opportunity to show their wares essentially, and sort of saying, we really like what you're doing, we'd like to invest in this. Some that are undertaking internal R&D and trying to figure out what they can do going it alone. So really, we're not just seeing one approach to all of this, and because we don't really know what ready looks like, we're still waiting on the technical standards to be finalised. Then people are sort of second guessing, and I think it's been helpful with the competition markets, though, with the open banking working group, because there has been an attempt at something. There's sort of been a saying of, well, we'll approach it via APIs and hope that that's sort of the way forward.
Kind of the assumption too, everyone assumes it's not written anywhere for the PSD2.
So in the UK, I think we've been quite lucky, certainly the banks that are part of that, because they've been given a target, it's still to be seen whether they've got it quite right yet.
And the Open Banking Working Group also gave banks that weren't part of the 9 an opportunity to play in that sandbox and dabble with APIs, which was great. And thanks to all of the guys who put that together for everybody else, because it makes a huge difference knowing that you can do it.
No, that's fantastic. And do you think banks are then communicating with each other and sharing stories? Because you said, well, this bank does this and that, or is this opening up that banks will share their plan of action for PSD2?
I would hope that we have a standard API across the industry, and whether that's governed through a trade body or some sort of regulation. I think if we've got different APIs, it's going to be just so disruptive for all of the financial institutions.
Yeah.
I still think that there's very much a sense of first mover advantage. And so I think banks are largely holding their cards to their chest and trying to look out to see what everybody else is doing, and only limited amounts of information are available about what the others are doing. I think they are trying to find out, and certainly there are very many different stages that people are at this point.
I think there's two elements to it. There's the competitive piece, and clearly everyone who's involved wants to understand the best competitive positioning for them, either by themselves or with a partner. But also, perhaps to pick up on Becky's point, there is, I think, a need for the industry to understand what's the common foundation that one can compete on. And so if one ends up in a situation where there's a whole myriad of different API standards, you end up in this sort of VHS Betamax kind of situation where it makes it actually potentially harder and potentially counter to the intent of the regulation. So I think to drive forward with a common standard for APIs in terms of their governance, their specification, such that those that do participate if you like, the API economy, as everyone is beginning to call it, can have confidence they can do so in a way that is interoperable, which is good for the participants, large and small, and also good for customers, because the products that they are going to engage with will be sort of interoperable across the various banks, as opposed to being locked into a single institution or to a small number of institutions. And that, I think, is quite an important dimension, is to really realise the vision of the regulation as opposed to just the letter of it.
So absolutely, this is the first step in leveling the playing field and making it accessible for everyone, which is great. To follow up with a question that was brought to the group, well, he or she brought up that one of the benefits I see with PSD2 is tailored financial advice. Is this something banks are happy about? Just to give the external audience, depending on how familiar they are with PSD2, I would say the two main objectives from a consumer standpoint is that we suddenly have this complete view of our overall financial status, at least within Europe. If you have in other countries, we'll see. I can't imagine that happening very soon. And then with less rerouting, payments tend to be faster. The assumption is they might be cheaper. We'll see about that, but these are two of the main benefits for the consumer. But following up on that question, how are banks happy about offering their customers new products, and how are they actually marketing and expressing this to their customers?
I think we're definitely going to see this concept of personalization, and one of the biggest drivers, I think, in how people are succeeding as fintechs is that user experience. I mean, that's the big driver of convenience. The applications that have succeeded so far in the market have been bundled into other products, which allow users to very quickly make purchases and to achieve things quickly. So that experience is certainly going to be a built-in factor. The readily accessible data means that people will have more option. People will be able to see what other banks are going to be charging for exactly the same services. So I think that's got to, at least from a user perspective, have a benefit.
Will that just drive every bank to just compete for the lowest common denominator, or will it drive value more?
I think there's an open question with that, but I think it's unlike, people talk about the race to the bottom in terms of pricing.
Yeah.
I'd like to think that the imagination and innovation of providers, both established and new, will drive the value conversation. And if we look at some of the things that we're seeing, to the point about bundling, it's more about what is the holistic product being provided, and embedded somewhere there'll be an execution element which will take advantage of payment initiation service provision, but you wouldn't necessarily look at it and say that's a payment service provider. It's just a service being provided that involves the movement of your money in some way. And perhaps important to also note, because we always talk a lot about payments, but the account information service provision element, which is the element whereby, if you like, the read-only element of participation, where one can use data from multiple institutions to create an aggregated view, or look at lending decisions and those sorts of things. All of these things together, I think they have the potential to drive value. And to Becky's point about adoption, it'll be sort of customer selected. What is the thing that will make me change my behaviour? What is the problem being solved for me, or the new thing that's being done that means I will interact in a slightly different way? And I think that's the question that no one really knows the answer to, because those that have been successful in the past, one could argue, as an industry, we perhaps didn't see coming, and there they were. So I think it's quite an exciting time. I don't think it'll be wholly a cost-driven thing. I think it'll be an adoption of new services piece. So, for example, we did some research around fintech adoption, and cost was down at number 4 or 5 in terms of reasons for adoption. It was all about ease of setup, ease of use, and an innovative product that is attractive. And those are the things that I think will drive a degree of adoption. Now, rate of adoption and whether or not these things hit critical mass is perhaps a slightly different question. And again, I don't think my crystal ball is necessarily any better than anyone else's for that one.
I think you've got to be careful though that the secure authentication doesn't ruin the customer experience. Yes. Because I love Amazon donk over your fence. If I've then got to put codes in and things like that, I might not use it. I might get in my car and go to a shop because I can't be bothered.
If you travel, you might not be able to get that notification, the SMS and things. Yeah.
So I think that's got to be right.
Which is back to the user experience point. And there's been a lot of discussion in the and there was a little bit of press yesterday, around this in terms of the potential dropout rate in e-commerce, if you like the like a blunt application of secure customer authentication. There is discussion of more risk-based approach, which better understands the type of transaction, and is it the sort of transaction that one would expect from this person with this retailer, and those sorts of things, to perhaps add a level of sophistication which is possible in terms of how this is applied to continue to ease that customer experience and promote e-commerce and business and use of new services, perhaps manage the risk of perhaps having an opposite effect, which I think, Becky, is what you're alluding to.
You sort of need a profile built rather than having very strict rules around it. Your 10 euros and what exchange rate are we using for the euro? Yeah. Some of it's quite bizarre, and I think that really needs to be re-looked at, and I know the FCA are putting together some facts.
And it's about future-proofing it too, because there's countries like Estonia, which is probably the most advanced government in terms of connected, but everything's tied to the SIM card. Yet by next year, Samsung and Apple are saying they're not going to have SIM cards anymore. So that basically means that this seemingly great way that 90% of the people vote online, now how they're going to do it if it's tied to the SIM card. So it's all about future-proofing everything as well, and we don't all have a crystal ball. So with that in mind, someone just asked, what do you think is the hardest part of PSD2 to comply with? What is the most challenging?
Becky to go first, as someone who has
That's a really
to comply.
good question, yeah.
I think probably that, from my perspective, the hardest part is the stuff that's not sexy and not APIs and not,
This is the first time in my life I've heard APIs is sexy. It makes me very excited and proud of my people.
Because I think the things
economy.
like one leg in and one leg out, that's got to be done. Customer investigations, that's got to be done. Transparency, it's got to be done. And to get people excited and enthused to deliver that, that's probably the hardest part, I think.
Okay. So it's not about complying, it's about getting people excited about having to comply.
Yes.
Because it's raining, have their recess inside or something like that.
Yes.
Find creative ways. Okay.
And to get people interested and excited around the mandatory stuff. Don't keep concentrating on the APIs and what the opportunities are, because actually you go to jail if you don't do this stuff. So you'll make lots of money if you do this, but actually this has got to be done first. And I think getting people's heads around that has been one of the hardest bits.
I think it's that balancing act between the two. But I think also when we look at more broadly what's going on in the industry, we've mentioned GDPR. There's obviously ring fencing here in the UK. There's a whole raft of change coming down from a regulatory perspective, market drivers, customer demands, expectations, renewal of infrastructure. All of these things together just create a sort of a multi-layered challenge for the industry and for institutions to deliver all of these things, which is not to say it's undeliverable, clearly not, but it is very challenging. So I think when looking at what's the challenge, it's perhaps less about the specifics of PSD2 or GDPR or any individual regulations, but recognising there's a big portfolio of change, or hitting around 2018, broadly speaking, that needs to be managed. And therefore to do that as an industry is a huge challenge.
Especially because you've only just appointed the person to run PSD2 in these different things.
So yes, so I think it's not straightforward. I think PSD2 particularly, I'd echo what Becky was saying around there's some things that must be done. And it's easy to get distracted by other things that must be done, which perhaps are a little bit more interesting, exciting, and get the press. And managing that portfolio of change with the degree of focus required holistically, as opposed to getting diverted to one piece over here, which I think is the conversation I know we've had previously, it is something that will continue to be challenging, because there's a cultural shift in the organisation as well, in terms of how does one look at what one does in delivery of these services, and the role the institution plays, and therefore the role of the individual. And I think that's something that's going to take a little while to bed in at an industry level.
I just see it from a marketing perspective that there's a long way to go in 1 year.
Yes.
And to figure everything out, to both market from PSD2 committee and everything to the banks, to persuade them, as you said, to be less feel like they're in trouble if they don't, less threatening and more excited to be part of these compliance. And then to the consumer to let them know that these new things are available to them. Yeah, it's completely.
Also, there's a point about actually just the consumer, the user, whether that's an individual or a business or whomever. helping them to understand what is happening, the education, the acceptance, the recognition. Because when you're talking about looking after people's money, when you talk about moving people's money, that's something that is an inherent responsibility comes with that. We mentioned it earlier around security and liability. So I think the industry needs to come together to help people understand the potential of this, why it can be a very good thing, and how they will be kept safe in sort of reevaluating how they engage with financial institutions. And that will then come to adoption and all the business cases that are currently being written across the industry. Yeah. And I think that the people side of that, I think, is a particular challenge, because when one looks at and engages with financial services, it hasn't changed that much really over many years. So something that could be really quite significant, I think it needs to be trailed with the people who are going to use some of these services.
And I think there are always going to be inherent risks when you put an additional party into a relationship. And I think certainly from my perspective, if we're talking future-proofing, then there are going to be situations where things do go wrong and payments are missed, or transactions happen fraudulently. So it's about making sure that we've thought about this in advance. How do you manage that relationship between your incumbent banks and your third-party providers? What can you put in place? Whilst the regulation says that you can't enforce a contract, actually there are good arguments from both perspectives, both the fintechs, the third-party providers, and the incumbents, why you would want to have a relationship in place to divide liability, or to make sure that security is maintained through both parties, and ultimately information is passed to the end user.
Mm-hmm. Absolutely. Another question that came up that I thought was very good was, does the regulation target cross-border commercial payments primarily, or do we think it's more for inside countries, or is it just for the EU, or is it targeting everyone really?
Well, so it's a European regulation, but there is this new element, which is the one-leg-out transaction, which does cover at least the European end of transactions where there is another part of the transaction outside of Europe. So that is a change, and that is something that banks are going to have to take into account, that they are still going to be covered in those situations now.
Because let's be serious, look at like an Amazon. That transaction might be the server inside this country, it might not be. And people are buying it from wherever, and that changes we haven't even spoken about the corporate effect and these different online businesses that are going to be dramatically affected by it. Do we think they will be? Is Amazon and other major online retailers even being brought into the conversation, or for PSD2, or?
There is a part of the conversation. So there's a discussion around, I guess, the PISP, the Payment Initiation Service Provider piece, and the degree to which a large retailer, whomever, would be, as a PISP, would be in a position to execute payments on their customers' behalf and offer a new payment method. So to that extent, then yes, that conversation I think has been going on for a little while. Again, the extent to which that is made real, it remains to be seen. I think adoption of new payment types, as Becky was saying, is not necessarily a thing that happens overnight. So I think there are those who sit outside traditional financial services who are looking at the opportunity, either from a payment initiation perspective, but also from the richness of the data that may be accessed with all the right controls to enrich the view that they create of their customers, for their customer and for themselves. So I don't doubt that many non-FS providers of services, telcos, large retailers, online businesses, will be looking at this with great interest, which again I think is part of the recognition that this is about financial services industry as a whole, and our whole breadth of services gets provided. It touches e-commerce, it touches large and small businesses, it touches not only the payment but the access to the information, and therefore the aggregation, and therefore it touches lending. So if you're a financial services institution, if you put up a map of your business, all of it will glow to a certain extent in terms of being touched by this. So it is significant, there's no question about that, but holds great potential, so it's worth it.
And I think on that potential also, what we're seeing, the ability of the technology means that it can be global. It applies to people who have an online bank account, and many people have online bank accounts, so they can make those purchases across borders. And so in terms of how it will apply, it certainly will have that element of people considering how you can do quick money remittance from this. And there are all of these different new possibilities that you can achieve through your bank account by using the technology that certainly will push it and the impact of it beyond the European boundaries, the European territory.
So as we keep bringing up, and I keep mentioning that, we decided instead of, even though it's January 2018, we're at like 7 or 8 months to really, of proper non-banking holidays, time to get these things done. What are the ramifications if a bank doesn't comply right away? What happens? Is that even, I've not actually read much about that, and I thought that was a very interesting question, because has penalties been even discussed in the PSD2?
At the moment, PSD2 puts it in the courts of member states. So I think it's still an argument to, how are they going to react to this? It's still to be seen. At the initial is the classic regulatory response. We can remove your authorization, or, we can deal with injunctions and classic remedies, but nothing specific as yet from PSD2.
So the point would be that maybe the EU or the Economic Commission or different parts of the EU will then put pressure on the regulatory in these
national
countries.
Competence authorities, absolutely.
Yeah.
In the same way as the regulatory technical standards have been put into the hands of the European Banking Authority, it's sort of a sense of all of the finer detail is very much still to be decided and will be in the hands of national competence authorities or the EBA.
I still question the competition side of this, or the communication and marketing side of this. Is this really being marketed? Yes, I think especially if you're like EY or your bank, you're really keeping your eye on this. But are the particular governments really keeping an eye on this? Are then the external outside of the EU that are deeply affected by it really keeping an eye on this? And is this really, from a marketing and communication perspective or public relations perspective, is this really getting communicated? Yeah.
I've heard of an instance, at least with one national competence authority, where they are thinking of applying for extension already because they're not sure whether they can actually achieve the regulatory standards within their country before January 2018. So
will an extension be possible? Is that even factored into PSD2 as we talk about ramifications? But I mean, it's to be seen, isn't it? I think extensions have been possible in the past, and so they're hoping to rely on the same again. But
I think it's an interesting point here in terms of what might the sanction be, because fundamentally, if we take the payment side of it, the flow of funds, the flow of funds is intrinsic in everything that we do, whether it's business, whether it's financial services, country, it touches everybody, it touches everything, and therefore that's an important point to recognise, because that's something, the stability of that is something that needs to be guarded, whatever any given outcome. And so I'm sure that the countries themselves and their competent authorities, the European Commission as a whole, is very keenly aware of that, and therefore any ramifications of not being wholly compliant come the deadline, I think, to a certain degree will depend on what does that mean in terms of non-compliance, because there's a number of things one has to comply with, some of which may be held in more or less degree of severity, for example. But simply that underlying requirement that funds have to keep flowing for the support of wider economy and the stability is a truth that I think is held dear by all. So whatever the outcome would be, I think the money will continue to flow, because the ramifications of that not being the case are not worth contemplating.
That's fair enough. I just want to remind everybody, as we're on quarter to hour left, please don't forget to add your questions. And with that, I want to ask another question from the audience. When all the financial institutions are putting a lot of effort and money into new infrastructural changes as a result of this regulation, is it rather other price models that we will see rather than lower prices for payments? So do we think we're going to see a different change in pricing model options, or will people just be expecting things to lower? Or
so I think but if one accepts, which I think most people do, that the value chain will move. So you have the existing incumbent players, large and small, still providing a level of financial service through either AISP or PISP type services. Others will join in. Then there's a necessary redistribution of value, if you could put it that way. And therefore the economic model that supports that end-to-end chain would naturally adapt. Now, whether that is the consequence of that is a rise or a lower in price is perhaps secondary to what is the perceived value and attraction of any given service. And if some of these services are very different to what's provided today, there isn't really a relative price point to go against it. So I think there will be some services for which there is, if you like, specific cost associated with it. Others will be developed on an economic model that allows for like consequential revenue drivers, albeit it may be about taking on a loan book and the interest that comes with that. There could be an advertising model. There could be more of an ecosystem play wherein your financial services existence is wrapped into a broader lifestyle portal, if you can call it that.
Certainly with APIs.
And exactly. And therefore there's a blend of services. So I think to say whether it would be more expensive or less expensive is perhaps less the question than what would be the economic model for some of these new services that come through, because that will out of necessity change because there'll be more players in the market, and therefore the value distribution will change with that.
And this goes into the wider conversation about the evolution of customer service and customer support that banks provide. And if more players in the market, there's more of a pressure as well to provide better customer service. And that's a good part of it, right? That's a good...
I think part of the response is if one provider is more expensive than the other, it'll be much easier to see that and to know that and to gain this targeted marketing of, we understand that these are your key factors. This is what you're looking out for from your financial service or product. Here are the details of providers that can give you that. And so then it's how quickly does the market react to that, and whether people truly care, whether something is more expensive, if it's a trusted brand, if it's their historic provider.
Not just their historic provider, I think a lot of it will be around customer service. Does it suit my lifestyle? Is it easy for me to use? Have I got choice? So I don't think price will be the main driver. I think a lot will be around customer service and the ease of using stuff.
The devices that it's available on, where you can get access to these services, something as simple as that will factor in and drive it, right?
There's also actually a service model question that says that if I'm a customer of Bank X and I choose to consume some of my service through one or a number of third parties and something goes wrong or there's a problem, then there's a question I've been to ask myself, well, am I calling the TPP? Am I calling the bank? If I call the TPP, will they say, talk to your bank? You know, we look at the early days of telecoms unbundling. There was a degree of ambiguity between who one had to speak to solve which type of problem. I think, again, it's a bit like the liability question, which says a level of clarity to customers to how one actually has to behave when there's a challenge. One would hope there'd be relatively few problems, but there will be some. And again, that's something that would need to get worked through, which is why this point about collaboration to understand these things is, in many respects, a very positive way forward. Because if one believes that all the institutions involved, new, old, large, small, all have a certain amount of customer centricity in their DNA, then answering that question as best as can be answered for those customers, recognising there's a competition around who delivers what services, does begin to bubble up these services of how does the industry serve their customers, back to the sort of, I guess, the collaborative foundation upon which all can collaborate and compete in a positive way.
No, it's definitely true, and it's it brings back to a theme we were speaking about earlier in an Internet of Things conversation, is that it's about breaking down the silos, and the only way you're going to be able to offer these streamlined services, offer these benefits from different things is by communicating, which isn't necessarily native to the traditional financial services market. So now they're going to have to get used to sharing more, like doing a webinar like this, going to conferences, going to industry conferences, instead of guarding our secrets, sharing them in a more open setting.
I think there is a degree of precedent in the financial services industry. So let's take the payments market. A lot of the infrastructure is, if you like, owned, run, managed, collaborated over in a way that makes it interoperable between institutions. So not everything is siloed, albeit I think you make a very good point about the communication. So I think there's reason to be optimistic in the context of elements of what we've seen historically and some of those things going on in the industry now, which allow for a collaborative foundation. Again, not necessarily straightforward, but it does bring us back to some of perhaps the less sexy subjects around getting the standards right. You know, getting the way that data flows understood by all and structured in a way that allows for interoperability. Because I think that is how the competitive playing field is set, and that is how easier access is achieved and competition is promoted, and you step away from a siloed closed loop type models, which in all honesty there's a risk those might evolve depending on whether or not APIs are appropriately standardized. But I think it's all there to get right, And the challenge, I think, now in a relatively short time frame is to lay those foundations to collaboratively get it right and allow for the competition, which again, not straightforward, but I think ultimately achievable. And I think some of the conversations that I think probably we have been party to, across different institutions, and not just banks, but the fintechs, the consumers of payment services, I think all, broadly speaking, agree with getting that foundation right is the best thing for all concerned. And so I'm optimistic that is the direction this will go.
And something you mentioned earlier is how the open banking initiative in the UK definitely brought in many other banks than just the big 9. So do we see that happening outside the UK, or are we looking at it from a very British lens right now?
Well, certainly my perspective, having spoken to a number of banks further afield within Europe, they are very much looking to what's happening in the UK. So not even amongst themselves, but looking at what's happening in the UK. They are very nervous. They understand this approach of first mover advantage, but don't want to be seen as, I think in certain jurisdictions in particular, there's much more of a tie of having that relationship with your bank and having a branch or having a building society that is available and a person you can speak to and have a telephone conversation. And so to be the first mover in certain jurisdictions where you're bringing in technology that shakes all of that up, it's potentially seen as a negative thing. So there are very, very different pockets of approaches and perspectives in terms of what this brings to the market, not all of them necessarily positive. So in those other jurisdictions, very much they're looking to see how the UK reacts as a result of the CMA and the Open Banking Working Group. And also because of our unique position in the UK of having London as this financial centre, London is very much a headquarter for many of the different banks in those different jurisdictions, and so if it works here, they will, I think, likely follow it.
Well, as we're winding down, I think there's a very logical question from the audience that just makes sense. Being that technology seems to be outpacing the decisions of the financial industry right now, what is the next step? Are we already looking for a PSD3, or what is the next step? What is the vision? I know you're so focused on now and waiting for now, but should we be thinking of that next step?
I think from a UK perspective, we've probably got enough on our plate at the moment. Ring fences, CMA, PSD2, payment strategy came out today. That's going to keep us busy for quite a while. I don't really know what out in the other countries.
So I think on that, so if we look at what the PSD2 is trying to achieve and the build on the original PSD in terms of the opening of the banking and all the services we've talked about, there's a lot to do, there's a lot of potential, and it's not necessarily capped. So it's not a list of things and then we're done. There's a sort of open-ended strategic dimension to it, which is enabled by technology. But it's not prescriptive about what that technology should be. No. So I think there is potential for the foundation to be laid, and as technology evolves, the services will evolve with it. Because if we get this right, the access to the data, the ability to move funds, the ability to consume financial services in a different way, and it could be branch-based, or it could be on a mobile, or it could be a combination. And indeed, there's some correlation between those. So I think it's far, far too early to be talking about a next PSD or some other such thing, because if we get this right, then the potential to continue to evolve out with any regulatory directive, I think is still there. And I would hope will be driven by a competitive market and by users getting what they need and helping the industry understand the best way to deliver those services. So I think it's probably premature because A, there's a lot to do, and B, I think the potential for almost an open-ended evolution is there with this as a regulation and some of the other regulations like GDPR and open banking that go with it.
I was going to say, so in terms of evolution that we've already got within the parameters that we've already got, there's still so much to be done in that sense in terms of understanding what the technical standards will look like, in terms of understanding how people will roll that out and then how GDPR will play into it. And so there is this wider context that plays into PSD2, starting, back beyond SEPA and the Single European Payments Area, and the other regulation that preceded where we're at now. It's still all being developed around PSD2.
And of course, what we see of technology in the last 10 years since PSD1, or PSD as it was just called then, not knowing there's going to be a sequel yet, or maybe they did, but it is, as we move away from the monolithic architecture in the banking industries, in governance and everywhere, it does with APIs, microservices, containers, and that trend, that seems to follow that technology will be able to be more reactionary to whatever regulations happen and to evolve with it. So that's exciting.
I would agree with that.
Thank you guys so much for joining us today, and thank you for being such good participants. Make sure that you can absolutely continue the conversation at Bright Talk on Twitter, and we hope you'll join for the next one. Thank you, and good luck as we wait and see what happens next in PSD2.
Thank you.
Thank you.